Good afternoon and welcome to CanadianAgMarkets.com. My name is Brian Como with Ireland Como Lafoy. Today is the 18th of July. Let's get right into what happened in futures markets today. Canola here looking like it's leading the pack, up $23 at 9.90 at 699.90. It closed on the X. It actually closed above 700 on the January. Minneapolis wheat was down 4.25 today at 615 and 3/4. Kansas wheat was down 5.25 cents at 517.5. Chicago wheat was down 7.75 at 533.50. Soybeans up 6 at 1026.50. We saw some good gains in the bean oil market today. Buck 47 up to, or sorry, 1.47 cents up to 56.15 cents per pound. Corn was down 3.25 today at 402. Canadian dollar now trading pretty well below 73 cents, 72.71. The inflation information out of the U.S. has really helped to bring the U.S. dollar off of its recent lows. Live cattle took a little bit off today, 42.50 down to 220 and 325. Feeder cattle were down 57 points at 325. All right, we're going to get into canola's performance today. It's interesting to me. This was a news bite that I get out of my trading software that said that canola futures were stronger on Thursday morning in what a trader called a surprising move. I don't know if what you could call today would be a surprising move. I'll get into that in a second. The trader said he expected the canola market to continue lower, but spillover from outside markets is pushing prices higher. Now, I do agree with one part. I think a lot of analysts were thinking that canola was going to continue lower. I don't know if spillover from the outside markets is the reason today, and I'll show you that in a second. We did see an increase in bean oil, as we talked about earlier, and soybeans and palm oil and European rapeseed, but canola by far outperformed all of these today, which means that there's something other than those outside markets coming into play here. What I'm going to do is I'm just going to go and show my show my screen here and kind of show the outline of what happened. So canola, we'll go in the November, up 3.5% today. That's a pretty good gain. It did do some positive technical things. As you can see, we bounced a number of times off the support, right kind of near 673. It's rallied now back above the 50-day moving average. It had some trouble getting up there earlier. Now, it's not a strong close above the 50-day moving average or anything. It also stayed below the 20-day moving average, so I would call that the next level of resistance. In fact, we probably can put a bit of a downward trend line on this market now just to kind of track where we might see a third level of support, which would be, or sorry, resistance right around 710 on the November. So it's not like this is out of the woods yet. It did have a really good day today. There were a little bit of technical signals that would suggest that that maybe we found a bottom here. We still could, as this market, as you can see, it kind of drops, rallies, drops, rallies. We are continuing to see lower lows and potentially lower highs. So we would need this market to rally, back above 735 or so in order to see a new high. It may struggle to do that. We aren't sure yet. I think, though, if you had been hesitating or hadn't been able to hedge off some of your canola sales for the new crop into the last rally, this may give you that kind of last kick at the can to do that. So make sure that you have your fingers on the trigger and your targets in and are executing well in this market, because it is volatile. And as you can see, we can gain or lose half a dollar a bushel, 50 cents a bushel in one day. So just be cognizant of that. And I'll kind of compare canola here to some of the other markets. Here's soybeans. Which one do I usually choose here? The November soybeans did rally today right up to the 20-day moving average. Wasn't able to break the 20-day moving average, or did break, but it wasn't able to close above the 20-day moving average. As you can see, that 20-day moving average has now slipped below all of these other major moving averages. That's generally a bearish sign overall. This market is also producing lower lower lows and lower highs. So it could still be in a bit of a bearish pattern here as well. If we kind of put some of the same trend lines into place on this market, you can see that there's potential to move up to the 1035, maybe even 1040 mark, depending on how fast it gets there. But that might be another good selling opportunity for the bean market as well. Now we want to take a look at soybean oil because that's usually a major driver. Generally speaking, the reason I'm saying that canola is doing a little something better than soybean oil is soybean oil is only a portion of the pricing mechanism for canola. As such, when soybean oil really rallies hard, and the reason that canola goes up because of soybean oil, we generally see soybean oil go up in a larger percentage. Today, we did not see that. We saw, 2.7% gains, or almost a cent and a half a pound on soybean oil. That didn't. Here, I'll blow this up as well. That didn't create a new high, unfortunately, but it got back very close to where the previous high was, and it did close at the highest level that we've seen in some time as well. So again, it's hard to say if this is going to break the previous high. If it does, that would be a very positive sign for soybean oil. As you can see, it kind of hugs this 20-day moving average. It did break below back in May, but since the big biofuel news push, it's kind of hugged that 20-day moving average and kind of had been trading a little bit more sideways. We are still kind of trading sideways. We're just at the top of that range now. So what happens from here, I think, is really important and will be really interesting to see. All right. The rest of the complex was relatively negative, or maybe I'll show rapeseed here as well because it had a good day today as well. Again, it's kind of bouncing off some of its lows, breaking above the 20-day moving average, testing that 50-day moving average. This has just started to break down below, some moving average crosses here recently. So if it can clear that level, there might be some more room for upside in Euronext rapeseed. In our weekly report that we're going to put out tomorrow, we do talk at length about the European crop situation, particularly for rapeseed, but also for wheat. So if you are a premium subscriber, you will receive that report. If you're not a premium subscriber, get on it, www.canadianagmarkets.com/subscribe. It's only 99 bucks a month, and you can cancel anytime, and you get all of the analysis that we do on the regular. All right, let's look at the corn market now. Here's Dees corn. Again, it slipped a little bit, but still has been rising overall for the week. You can kind of see that it's having trouble getting above that 20-day moving average. We kind of talked recently about it, potentially pushing into this 435, 445 area if it can muster a bit more of a rally. It may run into some resistance here at this 20-day moving average, but it did definitely lose a lot of value through the period where crop conditions were rising significantly. Wheat took a bit on the chin today. We have Chicago wheat down pretty heavily, 1.4%. It did make a new low and kind of broke down below those lows from late June as well. Again, we've been kind of calling for a test of those previous lows in this market and pretty much for the rest of the wheat markets as well. Hard red winter wheat also did break below some support. It did came back and closed above that support line. Here, I'm going to blow this up. It came back and closed above this support, but any break of support kind of makes it vulnerable. It shows that the market is willing to take it below those previous lows. So this would be a bit of a problem for the Kansas wheat market if it did break below. So we're keeping an eye on that. Minneapolis wheat for us northern farmers continued to fade today. Again, we've kind of been looking at a test of that 605 area and seeing if it can find some support there, but it's lost a significant amount of value, since late June, as the crop conditions in, North Dakota, northern Minnesota, even parts of Montana, and then throughout the Canadian prairies as well, got a little bit more advantageous as well. All right, moving on. There was an article published today by Ed White from Reuters. He actually sent me this article earlier than the publication time, which was kind of cool. But it kind of just talks about, the analyst expectations. There was a big ag show in Langham, Saskatchewan this week, Ag in Motion, and I guess there's a lot of speakers and folks that were willing to talk about their expectations for the crop. So Ed and Reuters put together some a summary of those, talking about just how the mixed conditions across Western Canada range quite significantly from terrible to terrific. Most of the analysts are just calling for an average crop of wheat, an average crop of canola, at least on the yield side. Some of the analysts even talked about how they felt that the size of the canola crop this year was going to be about average or in line with the last few years. I don't necessarily agree with that. This is our assessment of the Canadian canola crop, down slightly from 2023 and 2024. We're expecting 18.8 million tons at this point, based on our own yield expectations and acreage and abandonment calculations and things like that. So we are expecting a little bit of a tighter production year for canola. However, our assessment also has ending stocks rising, not necessarily on a loss of demand. I think we will continue to see strong demand, particularly in the crush. But the carry-in from this last year, I think, has grown a little bit as we adjust now to the Statistics Canada production numbers that were released a month ago or so. So again, production, I have it a little bit down, about 400,000 tons. I think I'm maybe on the low end compared to what I read there in that Reuters article. I don't know, but that's my assessment at this point. But we do also expect ending stocks to rise. All right, we did see the release of the Saskatchewan crop report today. I think this is the first one where they actually put crop condition ratings into the report, which is kind of nice. Just to kind of showcase some of the commodities here. Good to excellent province-wide in the for canola, 60%. We're pretty much there for most of the commodities. Oats is relatively high, largely grown in the northern areas, of course. Spring wheat is even, relatively high at 62%. The one standout that we see here is durum, which is a bit at a risk here. Not good crop conditions for durum. Field peas, pretty good in the 70s, lentils in the 60s as well. So, overall, not terrible crop condition ratings. I think they definitely got better as the growing season went on. Here's just kind of the maps that they put in the crop condition reports as well, that shows where the fair, good, and excellent. Just to be fair here, this kind of light brown or peachy color, those are still fair crop condition ratings, so not dire or super damaging. Where you do see that big risk is in these darker orange and red areas, and of course anything green and above is considered good to excellent. So most of the province is now in a good to excellent state. This would have been a different story 4 weeks ago, and of course it is relatively spotty. These are of course general assessments on the area. Rains have been very spotty. I've even heard differences between neighbors and things like that. So, these are always to be taken with a grain of salt, but gives a general idea. Spring wheat conditions actually look a little bit better, but of course you can kind of see the same kind of patterns. The central area is relatively good. The southeastern part of the province is relatively good. The southwest is at risk. So again, the heat and things like that may actually have not had as much of an impact on the wheat crop as it did on the canola crop, as a lot of the dryness and stuff hit when canola was flowering. Where we do see, as I mentioned before, the durum crop has low crop condition ratings. Of course, the big part of the durum crop is grown here in this southwestern part of the province, even in this southeastern part of the province, but this is a lower acreage base than the southwest part of the province. So the whole crop as a whole is still in relatively poor condition there. Barley, similar story. Again, there is quite a bit of barley grown in the southwest part, but a lot grown in the central part as well. So again, relatively good crop conditions here, as well as in the southeastern part of the province. Field peas actually look quite a bit better. They're a little bit more drought resistant. So, some of the areas where you would see concern for crop conditions in the durum or in the wheat or in other areas aren't as bad in the field pea crops because they can take a little bit more drought stress overall. All right, that gets us wrapped up for today. That crop condition ratings report, I'll link to that in the description below if you want to check that out. I'll also put a link to our premium subscription in the notes below as well. So have a great day, and we will talk to you again tomorrow.